Good morning, everyone. Today is Friday, February 24th. We are episode 10 of AM Chatter. Good morning, boys. I welcome to you Anthony LaPera and Tom Burko. How's everyone doing today?
Excellent, sir.
Good.
I am, as you can tell, I am offset. I got the sun coming up behind me here in our southern expansion. I'm down here in Atlanta, spearheading the expansion to our southern market. So that's why my different background. Let's throw it around. Mr. Burko, good morning, Yoda. How are you today?
Good morning. Good morning. We're raring to go. It's a little chilly, but not in Atlanta. Yesterday was enjoyable, though, so all good.
How'd that round of golf go?
It was a little windy, actually, up there on top of the hill. But I shot a 34 on 9, so it's pretty good.
Woo. I'd shoot a 34 in pitch and putt, so that's not too bad. LaPera, good morning. How are you today?
Good morning, fellas. I'm good, man. It's a little chilly out this morning. It's just kind of crazy. It was almost 80 degrees yesterday here in the great Pittsburgh area in February, which is unheard of, but I'll take it. So, yeah.
Well, happy Friday to you guys. You got anything planned for the Friday? Got any big items with the kids going on this weekend, Anth?
No, man, kids are out. Oh, we're going to be letting everybody know about these updates here.
Absolutely. Yeah, so I mean, the updates we got this week were actually so important we decided not to have a guest this Friday. T's and P's to our guest last Friday. He's got COVID right now. Got him down bad. So hopefully our auto expert can pull through. But the big changes we got this week were regarding FHA loans. There's been a lot of talk the last few years about some changes coming to mortgage insurance with FHA loans, and we finally got a little break this week. So instead of me explaining everything, I'll start off with Anth. Anth, explain mortgage insurance, talk about FHA mortgage insurance, what the change is, and why this is important.
Yeah, for sure. So mortgage insurance in general is risk-based insurance for the lender in case there would be a default, a portion thereof of that loan is insured. FHA loans, they're 100% insured, which is why they're required to be on the loan for the full term unless you do 10% down. Currently, the current PMI is based on a calculation of 0.85%. It's actually dropping to 0.55% with the minimum down payment. If somebody's doing 10% or more, then 5% or more, then it's going to drop to 0.50, which is really going to help clients lower their monthly payments. If we're looking at things in perspective, $150,000 loan amount, the PMI on that, before this change would have been 102 a month. The amount after the change is going to be $66 a month.
It is. There it is. We had the phone again in this episode. No big deal.
We're looking at about $36, which is going to have clients better afford that mortgage in that scenario. So it's a great update. I mean, it's a long time coming, and I'm glad they made the change, and buyers are going to reap the benefits of a lower payment option.
Tommy, so right now, a lot of buyers still going conventional. Hopefully this brings more buyers, some more buying power to bring to houses. Let's talk about a little bit. Agents will not go with FHA loans over conventional right now, it seems like, because of the appraisal process. Yeah. Me personally, I see just as many conventional loans called out for some of these things than FHA loans are. So maybe we can stop the misconception now and have agents start accepting FHA loans.
Yeah, I put this out there in my meeting at Moon this week, one of my offices here for Berkshire Hathaway. I was letting them know that the FHA appraisal conditions are not that bad. They may be bad on a lower priced home that someone didn't take care of. But if somebody wants to go FHA on a $250,000, $300,000 home, it could be the better deal for them. And it could actually save them $100, $200 a month because of this mortgage insurance drop. Now, say somebody would have a 680 credit score and a real estate agent would really want us to push conventional, have their offer accepted. They might be paying $100 to $150 more for that conventional loan if their credit score is not up to par. So we really, as financial advisors to them, their loan originators, need to be giving them options. And then the agents really need to respond and see that it's better financial for them to go FHA and not to be so scared of these appraisal conditions, because they do come up on lower priced homes, but we do see it on conventional as well. And that's just simply for the homes that aren't taken care of the way that our standards want them to be.
Yeah, and you're right. I don't know if it has much to do with the price of the home. It has more to do with, like you're saying, how it's taken care of. And the biggest FHA guideline out there that is a pain in the butt is the scraping and chipping paint. If you have a house that is chipping paint the entire outside, I absolutely understand why going FHA financing may not be the best option in that scenario. But you are exactly right. Mortgage insurance is on pretty much every mortgage out there if you put less than 20% down. FHA's mortgage insurance is set no matter what a credit score is, and now it's lowering. Where conventional mortgage insurance, that's put into a pricing engine, and that credit score greatly affects that. And that is something that if you're not in the mortgage industry, you're not really looking at. But if that mortgage insurance is $100 more a month conventional over FHA, absolutely it can be more beneficial for the buyer to go FHA over to conventional. And we just got to work all together to get that offer accepted. So, I think even maybe next time we'll go over conventional mortgage insurance and how much that can range.
Yeah.
Because I just did a conventional loan yesterday, and it was a 3% down. And, as originators, we know the 3% down option, if they're not home ready or home possible, that mortgage insurance can be extensive, especially if their credit score is not above 740. So, we're looking at all options for these borrowers. We're going to quote them a couple different options and products to show them what's better for them financially. And sometimes this FHA loan may come up more often than not now. So we really got to get that word out there to our sellers, the listing agents, to the sellers. Let them know the FHA loan is not a scary loan type. It is just helping borrowers get into home ownership, and they might actually have more buyers coming to their house if they do say we will accept an FHA offer.
Absolutely. And I know, Anthony, on your pre-approval, sometimes we'll send over an FHA. Go ahead, brother.
As far as letting the sellers know, like if an agent's out there selling a property, they're so minor. It's chip paint. So if there's a little bit of chip paint and a step without a railing, just have them do that before, while they're putting it on the market. It might take all of a couple hours to do, but you have less headaches in the process and more buyers able to get multiple options for financing. So doing it ahead of time would be beneficial as well.
Yeah, no, I agree. And as I was trying to say before, with the pre-approvals, guys, agents, when we pre-approve someone, we are running them through every mortgage option. That is what we are doing through the pre-approval to see what loan is best for them. If we send over a pre-approval letter that says FHA and you put in a conventional offer, that may not work out the best for the buyer. That's the only thing I'm saying. If we need to switch loan programs, let's all talk it over. Let's all work together. From my experience, teamwork makes the dream work.
Good job, Mr. ATO.
That's all I got. Anyone else got anything before we wrap up?
That's it.
Have a blessed weekend.
You too, boys. Talk to you later.
Later.